All right, so today's August 7th, and this is just a little forecast for the coming week. So on Friday, we had the non farm payroll number come out for the month of July, and the expected number was 250,000 added jobs for the United States, and we ended up getting 528,000. So a huge beat on the NFP. Normally, this would be amazing. Like, this would be an incredible, like, you rarely see a beat like that. That's over double the expectation. So, um, funny thing is, well, it's not funny. It's understandable. That sent the stock market down. That number. I watched it happen. I watched the Nasdaq drop over percent in 1 minute. Um, and that is because that many people having jobs is going to have it's going to put upward pressure on inflation, assuming that those people are going to spend that money, right? So the last thing that the United States needs right now is more inflation, and that NFP number suggests that there probably will be more inflation. And I heard Jerome Powell say, and anybody who has listened to the FOMC meetings, you'll hear him say, like, we need to see a softening in the job market. And what we just saw with that number is the opposite. So that's just going to make matters worse. So what this means is they may need to be more aggressive with the rate hikes, and they may need a higher terminal rate than they're currently thinking. So that's not good for stocks at all. That'll send a lot of them down. There's actually a high amount of companies in the S&P 500 that are called zombie companies. So these are companies that they literally can just afford to pay their interest payments on their debt. So when the interest rates go up, that debt becomes more expensive. And obviously, consumers are more likely to throw their money in the bank than spend it. So putting two and two together, some of these companies will go bankrupt. That's not good at all. But yeah, it's just kind of like weeding out or picking out the weeds, I guess. So every time there's like an economic downturn like this, the bad companies, they go bankrupt, they disappear. And that's kind of needed, right? Like, you want to have um very good, strong companies. You don't want to have a bunch of, like, sketchy, barely afloat companies in the stock market, because it's not a good thing unless you're a short seller. So, anyways, what I'm expecting is we have the CPI number coming out on August 10th. So that's going to be this coming Wednesday. And I actually think that it's going to inflect to the downside. I do think that this one's going to go down a little bit, and that's mostly because of oil. The price of oil has come down like pretty significantly. Looking at it here on my other screen, we peaked in the 120s in June. So basically, that's the main reason why we had such a bad CPI number for the month of June that we got in July, because it's a month dated, basically. So anyways, that really impacts the CPI reading. But right now, oil is in the 80s. It's the high 80s. So that would suggest to me that we may see an inflection of the downside on the CPI number. And then that will basically drive the NASDAQ and everything up. So I could see this bull run continuing. Of course, if the CPI reading comes in hot, even higher than expected, then we're not going up. We're going down. We'd have to. But yeah, say we do get a miss, we're probably going up to like 13,700. I could easily see that happening. Um, People are starting to think that this rate here was the bottom. So, retail investors are usually late to the party. And we also know that institutions right now, for the most part, are sitting on record amounts of cash. So they have the cash. They just need a reason to, deploy it. So my thoughts are that this bull run will continue for a little while. And then if the real estate market really starts to slow down, and then the CPI numbers start screaming back up because of all the people who have jobs, over double what they expected, then we'll see the inflation tick up more, and then we will see a turn to the downside because the Fed may need to raise rates way more than they think, and that could bankrupt a lot of companies. So there's going to be a lot of movement, needless to say. It's going to be a good time to be a trader. Investor, not so much, I would say. I would say if you are in like big profits on holdings that you don't just plan to hold forever, I would probably secure the bag at this point, or some of it, because at the end of the day, it's better to have some cash on the side in case we do have a downturn. So, not financial advice, of course, but that is what I see happening. So, bull run should continue depending on the CPI number that we get. But yeah, like probably September, October, then we will probably start to see a nice move to the downside as well, which will be probably a good time to buy. So that's the update. Good luck.